Hello, good morning everyone. Today we are going to review some very basic trading concepts and how to use the NinjaTrader 7 and NinjaTrader 8 platforms to show an instrument in a chart and do some trading setups. On the right we can see the main windows of NinjaTrader 8. This is the main control center, and this is an example chart picture. On the left side we can see the Ninja 7 control center and a chart as an example. On both examples we are looking the futures of Dow Jones. When we want to create a chart on Ninja 8, we click on New Chart, and here we select one instrument that can be a future, an index, a forex currency, or a stock. On this example we are looking the Dow Jones futures that expires on June 2017. We choose a time frame. Then we are going to talk about the time frame. Most of the platforms have only minute time frames, but on NinjaTrader we have several bar types. Let's say that we select a 1 hour time frame, 60 minutes, for the last 180 days. Here we get the chart. The horizontal lines are spaced 10 ticks, which is the minimum space that I usually use for a target. I mostly use it for have an idea of how much movement is on an instrument. Usually a stop is between 15 to 20 ticks, and the minimum size of a target is 10 ticks, so we can see how many trade opportunities we have by looking at the number of horizontal lines. There are some instruments, for example on Standard & Poor's, the possibility to have a 10 tick trade is lower. On NinjaTrader 7, to create a chart we go to File, New Chart, and then we select an instrument from a list that we must create previously from Tools, Instrument Manager. We select one of the instruments. We have currencies, features, index and stocks. For example, the Dow Jones, the current instrument is the one that expires in June, so we add this instrument to the left column, and this is the column that we have available on all our charts. So we must add all the instruments to the list, and then we can select the instrument that we want to use for the chart from that list that we have created. Now let's take a look at the different type of bar types that we can use. This is a 5-minute chart. I will add the volume, so we have an idea that which are the time windows most appropriate to trade this instrument. So here we can see which is the time window where we get the most of the volume. If we wanted to trade outside that time window, like for example between 3 to 5, on this example we have enough volume and a small price action, but on other instruments it can be very thin. Like for example on this instrument, the mini euro, we can see that we have very low volume outside the day session. For example, from yesterday at night to today on the pre-market, the volume is very thin, only 10 to 20 contracts per bar. And the most important is the price action, where we can see that we can wait for hours and we don't move even the 10 ticks of the minimum target. And that happens all days, where outside of the day session the volume is too thin and the price action very hollow. Here at 4 AM, where market opens at Europe, maybe we had a news report that produced that spike. If we go to something more volatile, like for example DAX, now we can see that the volume is much bigger all the day. And same for the price action, where we have big bars and also a good movement. We can see that the size of the movement because the number of the horizontal lines that we have. On this chart, where we look at minutes bars, all the bars have the same duration, but there are some other bar types, like for example tick, volume, range. We can also select the time frame from the toolbar, and we can even configure the preset for the most used bar types and time frames. If we select a range 10, that means that each bar has a height of 10 ticks, or all the bars have the same height. 5 points on that are 10 ticks. What on this time frame is not constant is the time. If we look at the distance between two different bars, this space of 38 minutes is not the same if we shift in time. On this example we have 1 hour and a half or 2 hours or even more. And here at day session we have only 20 minutes. This is the reason why the volume has a better distribution, because when we have volume there is movement, and when there is movement we have bars. One of the features of the range bar type is that the volatility is constant. The volatility is proportional to the ATR. If we add an ATR on histogram format or bar format, we can see that it is constant near 5 points, because all the bars have 5 points in the ATR. If we change the period of the ATR, there is no change, because the ATR is constant on this bar type. This bar type is very useful to watch the structure of the price action, because it comprises the areas without movement, and we get a good detail on areas with a lot of movement. It is very useful to detect pivots. And then we have the volume bar type. Let's say that we choose 1000 volume. On this case, all the bars have the same volume. As we can see, all the bars have the same 1000 volume. If we decrease the number, let's say to 50, then we get a faster chart where each bar has a volume of 250 contracts. On this bar type, the volume is constant, but not the time. When we look a chart, a volume chart, it looks like the price is always moving, but this is because when there is volume, the price moves. As we can see, the time is also not constant on this type of chart. If we go to a minute time frame, then this interval is constant. Let's say that we want to get a half hour, that will be 6 bars, then the time is constant. Then we have the tick charts. On the tick chart, each bar has the same number of transactions. Each transaction can be of one or more contracts, so the volume may not be constant, but it is in average always the same, and it depends on which is the average of number of contracts traded by each transaction. If we look at the 100 ticks, and we get on this example an average of 120 contracts in volume, that means that the average trade size is 1 contract. On the Standard & Poor's instead, if we look at the 100 ticks chart, then the average volume is around 300. That means that the average trader trades 3 contracts as an average trade size. Then there are other bar types, non-standard, like for example the UniRenko, where we have 3 input parameters instead of only one. And as we can see on this bar type, it tries to filter the part of the noise, so we get a more clear trend direction. So the bar changes color, changes the trend with less, more in a smoother way. If we look at the ATR, we can see that the volatility is also constant, almost constant on this bar type, very close to the reversal input parameter. On this example we have 10 ticks of ATR and we are using a reversal of 12. This bar type has 3 input parameters: the trend direction, the offset, and the reversal. The most important is that on this chart the volume is not constant and the time is also not constant. The only thing constant is the volatility, and it filters also the trend. As the volatility is constant, that means that if we choose an instrument with a higher volatility than the one that we select, let's say that we choose a reversal number very small. This is the main parameter. The reversal is the main parameter to filter the noise. This will be a fast version of the UniRenko, where we can see that we have more waves. That means we get more fake reversals or color changes. If we go to the other side, this is the standard where we started with the 12 ticks reversal. If we want to make this smoother or eliminate the noise, we can make this bigger. Let's say that we go to twice the numbers. Then we can see that we get a smoother picture. But we have to take into account that now the bars are bigger. When the bar is bigger, then also we need a bigger stop, because usually if we enter long on this place, we place the stop on the other side of the bar, and the bar is proportional to the ATR, that on this case is 15 ticks. So we should be using something bigger, let's say 20 ticks for this example. The bigger the number on the reversal setting, the smoother the price action, but also the bigger the bars that we get. So we need a bigger stop. One of the easiest setup that we can follow with the UniRenko is the bar color change. If we just trade the color changes, then we enter long, short, long, and so on. So that will be very simple. We can signal these color changes with the custom indicator and bars, where we can specify the number of bars that must have the same color change. Let's say at the first bar that changes color, at the first down bar or at the first up bar, we paint a signal, and this will be our entry signals. This will be the open-close setup. If we want to avoid this fake signal, we can add a number of bars, like for example 2 bars in the same direction. So we eliminate this fake signal, but we also get a delay, because instead of entering at the first red bar, we enter at the second. When we filter, we get also a delay. All of these signals can also be filtered by a higher time frame trend definition. Let's say, for example, that we add a line. So on this uptrend, we could be taking only longs, and for that we can use, for example, a linear regression. And we need to find which is the most appropriate period, so it follows the trend on the higher time frame, on the big picture. Here, for example, we can see that we are trending up from this point to the end of the chart. So we will be taking only the long signals, only the blue arrows, and here only the short signals. We avoid these blue arrows and we take these red arrows. Same here, we take only the longs, and here we take only the shorts. This is the filtered open-close setup, which is very easy to trade manually. We only need to configure the best combination of UniRenko to filter the noise and just trade the color change. We can paint the signals with this custom indicator, the N bars up down, which can also be automated by markers. If we have marker plus, we can also add filtering. If, for example, we want to automate these signals, we need to add the marker plus, and configure the trigger signals: blue arrow up for longs, red arrow down for short. We also need to specify an ATM. For the ATM, we can select something that we have already defined or create a new one. We select custom, so we get this dialog where we can define our trade size. For example, with only one contract, we can specify a stop. For this example, we will need something higher than the ATR. So we can use 20. So the noise cannot take or trade out, and then a profit of the same size for the target one. If we trade a bigger target, or we can trade two contracts, let's say that we trade two contracts, then we can split our position in two, with one contract on each position, the same stop, and a profit bigger. On this example, we can see that we can get 50 ticks, more or less. So we can place a 50 with a trailing stop that should be in the order of the ATR, slightly higher than the ATR. For this example, we can use 15. So when we are 15 ticks into the profit, each one tick we make a better price, we move the stop 15 ticks below. So this is a 15 tick trailing stop. Then we can save this as a template with a trail of 15. Now we can select that template and use it on markers. If we enable markers, now we can select any ATM on JeopardizingTrader, click on the ATM button, and then we can enable. We can see the configuration is long for blue arrows, short for red arrows. We can enable the longs, enable the shorts, and we are on manual mode. That means that when we get a blue arrow, it enters longs and disable the button. When we get a short, it enters short using this ATM and the button is disabled. If we want to trade all the signals, we can put automatic mode, enable longs and enable shorts. This is everything for today. Hope this video has been useful for you, and if you have any question, please post below this video. Thank you everyone. Bye bye.